Hey there. In today's podcast, let's take a look at what happened in the market, right? So, this is a finance related podcast. As you may or may not know, one of the next things we are beginning to work on is a fintech API, which is why we are spending a fair bit of time, doing trading, whether it's day trading or investments, just to understand a lot more about a lot of the pain points that happen to exist, so we can build solutions to cater to those problems. Because we typically start with an API, given that we are an API provider. Amongst our other products, APIs are one of them, and then we'll build other tiers on top of that. So if you have an interest in this space, hit us up or follow our page and whatnot. So without further ado, let's just go into today's market. Today was an very interesting day, right? I mean, the an average day in the stock market turns out to be quite interesting. If you like, at least if you're the one, if you're like me who like the volatility. But today was right up our alley. If you belong to that school of thought. So yeah, you see AMD in the background. It's because they reported earnings after market, and they reported good numbers actually, right? I mean, they've done that for the most part. I think if I remember the last many quarters, if I'm not wrong. But you'll see that after hours, they are down about over 8%, which again, it's not necessarily surprising given that they've had quite a bit of a run. Let's see, in the last year, they've gone up over 100%, 101, 111.88%. This year alone, they've been up 13%, and the last 6 months about 37%, right? So they've had they've had quite a good run. And if you looked at this, let's say I do the 1 year, the peak was, I don't know, somewhere around October, towards the latter part of October. I believe that's when they had the previous earnings, if I'm not wrong. So you see that they were up to two. I don't know. Let's check what their previous earnings date was. Oh no, yeah. I mean, I have to look this up. But I'm guessing it's somewhere around there. So they were up to $264. So they're only about like just shy of 10% lower, below their peak in the last year or so. And now we see this drop. Now we'll have to see when the market opens tomorrow if they continue to drop, or if there's just if it's sort of like uh, you know a momentary fluctuation, if you will, where they pretty much catch back up. Who knows, right? I mean, I can't see the crystal ball. Can you? But they reported some good numbers. You can look there. I think they beat the top and bottom line. Their non-GAAP EPS they beat by 21 cents, and their revenue they beat by over $600 million. And I think that guidance as well. If they expect they have higher guidance for the subsequent quarter. So they beat top and bottom line, and they're expecting they reported higher guidance as well. Regardless, the share price drops, and this is not new. We've seen this happen. Companies actually sometimes report really bad numbers and the price goes up. So make of it what you will as far as immediate after hours reaction is concerned. But if you looked at let's go to tip ranks and just look up AMD. Want to quickly see how their previous earnings went. Okay. So I guess the last one, no, was yeah, it was towards the end of October. I think it was on November 3rd, maybe. So the day after, they were up 2.5%. So you can see the fluctuation here, right? It's been under a 10% for the last many quarters, or a little bit over 10% a year ago. Um, this one shows about 8.5%. We can see if it ends up adjusting, and AMD ends the day tomorrow somewhere in the negative, but probably a whole lot lesser than -8%, maybe -4 or 5. I don't know. I'm not a financial advisor, nor do I claim to be one. So take this with more than a grain of salt. And this is purely for education and entertainment purposes. That's the disclaimer. So we'll see how it goes, but that's what seems to have transpired in the last many quarters. If you look at the analyst forecast, take every forecast with a grain of salt because it's always under adjustments. Wall Street's going to come back and say, yep, they like it. They're going to bump up those numbers, or no, they don't like something. And these estimates can change ever so soon. So take them with more than a grain of salt. but it sure shows here that there's an 18% potential upside in the next 12 months. The lower end is, what is it, like $210? Where are they at now? Yeah, 242. So about 15%, right, give or take, from today's pre-market, not pre-market, before, at the time of the price they were when market closed, whatever the right word for that is. um, so that's as far as AMD is concerned. But let's also look at some other companies that are, today was an interesting in the market. If you looked at, actually, if you looked at NASDAQ. Yep, you can see that they dropped a little, just under 350 points, but they were, around 2 o'clock, which is where the trough was, the lowest point, I think, around there, 23,000. So they caught up about 200 points, right? About 1%. They caught up 1% in the last couple of hours or so. So the market did turn around a bit, and I think Dow probably was around the same thing as well. Um, but there was a lot of action, and a lot of action, particularly in a few companies. One of them that I had actually traded today was Broadcom. If you do the 1 day chart here, so they opened at around $335, and then the lowest point was around a little bit after 2 o'clock or something around there. Yeah, about $309, right? So opened at 335, give or take, and 309, which is $26. What is that? 8%? Yeah, about an 8% drop from the point that they actually opened, if my math is not incorrect there. But then after that, from 309, they closed at about little over $320. So they caught up about 3%, and there was a lot of action, right? In terms of their volume, you can look it up. I don't know if Seeking Alpha reports um, the exchange traded volume, but is it today's volume or the average volume? Let's assume it's today's volume. It was either on par or, just higher the average, higher than the usual average. So a lot of the tech stocks took a beating, right? So if you go look at the tech stocks here, by the way, sort by change percentage, you can see that, right? It was pretty much red for the most part, and maybe at least the ones we are tracking a bunch, and some, eventually turned green. If you look at Core Reef, for instance, it had a very interesting day, right? Very interesting day. So it opened at about $91, just under 92. Let's say at about before 11 o'clock, they were like $91, right? Uh, about 12 to 3 hours later, $6 down. What is that? About eight, 6 7%. Yeah, about 7% down. And then they caught up all the way, right, from 84.40, 84.20 to $90, right? So they caught up, was like a little over $6, about 8%. So you can see that if you had, if you were the lucky one that had shorted core weave somewhere around 12:30, and covered here, meaning you had seen the crystal ball, you were able to see it all the way through, right? I'm just kidding. And then you bought it here, you'd have been in pretty good shape today. But there was a lot of action with core weave as well. So the market clearly, after 2 o'clock, things turned around a bit. But for the most part, I also want to talk mainly about a couple of enterprise software companies in this podcast, right? And I'll tell you why I felt like having this conversation today. So it's not for no reason. I'm going to go to Salesforce. No, Salesforce is below $200. Let's see when the last time was that they were below $200. Not in the last 1 year. So I'm going to keep going here. $202 in October 2023. Yeah, I see around, what is it? Yeah, I think it was May 8th, 2023. It's coming up 3 years, right? Well over 2.5 years. So the price of Salesforce CRM today, at the time of this recording, is the same as the security was a little over 2.5 years ago. So you can say that, they have not had a good run, like in the last almost 3 years here. But the peak between in that window, They were up to like $367 at the end of 2024. So about a year, just a little bit over a year ago to now, they've dropped $170 from the 367. That's what is like 45%, 47% maybe. So they've lost half their value, give or take, in the last 1 year. I mean, that's means something, right? And let's see what has been happening in the last 12 months. No prizes, for the any again, no prize for any guesses there, because it's just about everything that has been happening has had something to do with AI. So clearly, they've been impacted very much by AI agents, and everything else in that space. Now, Salesforce also launched their product called Agent Force, and I believe they actually launched it. Let's see, when was Agent Force launched? In 2024, right? So it was launched in 2024, and we've saw, based on what we are seeing here, we see that did it say September 2024? I should have noted that carefully. Yep, it was September 2024. So let's see. Let's try to make sense of this. So I guess a little bit after September, maybe they reported earnings around that time on December 4th. Let's see. I don't want to switch to another app product platform here, but let's make some assumptions, right? And again, don't quote me on this. Just go verify. This is just a lot of it is ballpark and assumptions and my personal learnings. Um, so a couple of months after they launched Agent Force, they seem to have, let's say September was $266, and they went up about $100. That's about 40%, right? Maybe 37, 38% in just a couple of months. And one has to believe that maybe they launched this AI product, Agent Force, and everyone was super stoked about it, right? Maybe that's my assumption. That's got to be the case. So it went up there, and maybe things didn't turn out very well. Now I did some reading. I don't use Agent. We don't use Agent Force at Snowpal, but I think I did. We did a podcast on it, either that product or some other product, a few products that Salesforce owns. It was a little while ago, so I don't recall. My apologies. Uh, I don't think the market reacted very well. They've had a fair bit of issues in terms of pricing. I think it was very expensive, so people didn't like it, and perhaps it didn't even do the. It was not anywhere close to what was expected from its feature set and performance standpoints. Now, again, they probably were rushed to push this out of market. I have no idea. I'm speculating here. So if you want to speculate more with me, please join our podcast. So they probably pushed some things to market in quick time because they had to, right? Because they had to make a point, make a case to the market saying they were not caught lagging behind. So maybe the market rewarded them, and it gave them a 40% increase from that point onwards. But surely, the devil is in the detail. Once the dust settles, probably people figured that it wasn't really doing what it promised, or maybe it was just buggy, or maybe it was too expensive. There could be a number of reasons. So it's, reality perhaps set in. And now we see that from that point onwards, it's been a 50% drop. I mean, that's a steep drop in the last 1 month. Sorry, the last 1 year, 12 to 13 months or so. And they even in the, let's say in the last year, I mean, not last year, year to date, like 4 weeks into the year, they're 25% down. I mean, when is their earnings? I mean, oh well, they're reporting earnings in 3 weeks or so. So I mean, we'll see how it goes. I mean, there's a bunch of buys and strong buys and whatnot. Probably there is, maybe people are saying it's a decent time to buy because the sell off has been high. uh, I mean, the price earnings ratio seems pretty all right. The forward P 17 under 20, but again, it's not really a growth company, so maybe that number is not all that good. The short interest is just under 2%. That's all right. So I don't know, right? I've generally been skeptical of Salesforce, and I've never, I've used it very little in my career, and like I said, we don't have a need for it at Snowpal. So I mean, I've done reviewed some of their products, and again, they were all right. There's nothing that took me by surprise or something that blew my mind away in terms of what I had seen. There's just me talking personally, as sometimes reviewing tech products as one of the many things we do here at Snowpal. Um, may mean something, may not mean a whole lot to you, but the point is they've been dropping in the last 6 months. 22% down, and you can see in the last 5 days they've been about 8% down. So I mean, this is as low as they've been, we've seen in the last 3 years or so. So if you believe in the company, if you like what they're doing, if you like the products, maybe you look at it differently than somebody who doesn't. But that's an enterprise company that's taken quite a bit of a beating. Let's look at a couple other enterprise companies that have also taken a beating, and let's see if we can draw an inference, from this. Adobe, I'm sure you're familiar with Adobe, and let's say they are $271, right? So let's see when they were at this price previously. I'm going to keep going here, doing a 5-year chart. 278. So somewhere around where they're at now was September 2022. That's about close to 3.5 years ago, right? But even then, it wasn't today's price. It was like 3% above that price. And then if we keep going, I can't even find today's price in the last 5 years. So maybe I have to go back last 10 years and see how it goes. Well, not September. Well, this is interesting. Well, if I'm not wrong here, if I have to find where they were at this or the price below today's price, it was way back in 2019, March 2019, and we coming up with next month is March 2026, so 7 years ago. So if you bought Adobe today, I'm not saying you should. I probably am not going to, but it's left to you, right? It's your money and your risk. But if I were to buy this today, I would be buying it at a price from like 7 years ago. That's almost, three-fourth of a decade away prior to where we are at now. And then if you look at the price earnings forward P, it's 12, rather low. I mean, good numbers. Their short interest is close to 3%, meaning people are still shorting this, saying that, I mean, that is fairly high. I mean, it's not like 20% high, like maybe what Sweet Green might be. I'm just curious what the short interest on Sweet Green is. Yeah, 21%. I wasn't far off there, but it's still rather high. Anything above 1.5%, it means that people are interested in shorting that security. So they have lost a lot of value, right? They're at the price from like 7 years ago. In the last 5 years, they've lost almost half their value. And they used to be they used to be a very good, a solid enterprise software company. But with everything that's been happening in the space of AI and everything that Alphabet's been launching, be it Nana Banana or anything, everything else, it's clearly made Adobe's life difficult. Now, what do you believe is going to be the case? Let's quickly go to tip ranks for a second. I didn't want to switch gears, but I'm curious now. What is the analyst rating? Wow, that's in the 12-month, the higher end, the average forecast is, the analyst forecast is like 66%. There's a 66% upside potentially, and they're actually higher than the price on the lower end. If you do believe the Wall Street analysts, you I know why it's a moderate buy given that it's a 60% upside, but anyways, let's go look at Adobe. Adobe is exactly there, 62% upside, potential upside in the 12 months. And then the lower end is $310, which means they are well below. So they are both at about the same point as far as the market, Wall Street is concerned. Now, when is Adobe reporting earnings? Let's look at that. Oops. Yep. Adobe is going to report earnings, yep, about a month, maybe 4 to 5 weeks from now. So we'll see how it goes. And again, you see some buy and strong buys, and mostly it looks like a buy and a strong buy on Seeking Alpha. So what do you mean if you have trust in these enterprise software companies, and if you believe that they're going to, this too shall pass, and they're going to survive this phase of AI. Survive meaning either their products survive, Alphabet's products in the competition's coming lock, stock, and barrel in this space, or they improve. They've been launching AI products as well. They improve that enough to back or second their core enterprise products, that things become better than they are today, right? Then you can see a fairly good upside here if those things were to happen. But you can see that that's not being the case here with enterprise software. Let's also look at a couple other companies. Maybe we look at ServiceNow. Again, down 46% in the last 1 year. I mean, their forward piece is not as low as the other ones, but it's 28. It's all right. Short interest is just under 2%. Let's look at when they were at this price, right? Previously, $109. Around, I guess that around October 2023, about 2.5 years ago, they were around there, right? So this is the closest. I think with CRM we saw close to 3 years, if I'm not wrong, and with Adobe we saw 7 years, and this is like 2.5. So someone's buying them today is buying at the price that they were at 2.5 years ago, and in the meantime they went up to $234 in, I mean, a year ago, right? So they've lost 50% in the last 1 year, right? Is that what this said? It's at 46%. But if I'm looking at just a week ago from today, they've dropped over 50%, right? Over 50%. That's again, that tells you something. Exact same thing as I think I can draw the same inference for what I think we did with CRM, Salesforce, and with Adobe. Enterprise software, AI has been making an impact, clearly a strong impact. Now, if you look at tip ranks for this, is that going to be a 60% prediction as well in terms of the stock forecast? Well, it's a little bit over that, 75%, and it's a strong buy. And the lower end is $115. They are below the low end, right? So, which means all of these three companies seem to have something in common, right? From a pricing standpoint, they've all taken quite a bit of a beating in the last 2, 3, 4, 5, maybe 7 years in the case of Adobe. And then it depends on whether you are in it in the long haul or not. Now, if you are not going to retire in the next year or 5 or 10, and if you somehow believe in these companies, maybe you might want to look at them. But on the flip side, given that there's a lot more action and interest and momentum in semiconductors, in energy companies that are fueling these powering these data centers, and other companies that are like the hyperscalers, right, who are a mix of both hardware and software, like Apple, for instance. Now, if you have an interest in those companies, do you have a good reason in taking a chance here? The only reason could possibly be that they've dropped quite a bit, and you expect them to catch up, even if not all the way, a fair bit there. So, which means your reward to risk tells you that you might be better off, maybe taking a chance with one or more of these. But that's each their own, like I said earlier. So that's three enterprise software companies. I'm going to look at a couple of others because this is getting interesting in terms of its consistency. I did not plan to pick all of these companies that I'm sharing here. I was just going to talk about one or two of them, but this is we are able to arrive at a pattern here, right? So let's kind of keep going, maybe for a few more minutes and see what we can find here. Monday.com, a project management tool, they're down 60% in the last 1 year. So let's see, so they are $101.71. The last time they were there, was it around? Yeah, somewhere around here. Yeah, somewhere around here. So November 2022. That's again well over 3 years, right? Which is exactly the same as what we had seen for the other three companies, for most of the other three companies. And then in terms of the peak in the recent past, $320. Oh my goodness. Oh my goodness. They were $320 just about a year ago, and they're one third the price right now. I mean, less than one third, literally. So they've lost 66 or 68% of their value in the last 1 year. I mean, that's scary. The short interest is very high, so people are maybe still thinking that it might drop, or people who may have shorted this at a higher point probably have not covered up until this point, which means they are still expecting perhaps it to drop a bit more. And if it reverses course, maybe they might cover, right? So you can see that the short interest being almost 8% means if there is good news, things can change fairly quickly. And when is their earnings coming out, right? Again, wow, in a few days from now, and they dropped 10% just today, and they're 31% down for the year. Let's look at tip ranks, and don't tell me that we are going to see the exact same analyst rating, which is like up 60, 70%. I take it back. It's even more, even better. It's a strong buy at 150% upside in a year, and the lower end is $140, which means you have, if you believed in these forecasts, you have a chance of making a 40%. They're having a 40% return on Monday.com in the next 12 months, even at the lower end. You don't even have to go with the average forecast, and I'm not even going to bother talking about the high. So very similar to the other three companies we just saw. So let me recap: Salesforce, CRM, Adobe, ServiceNow, and now Monday. What else can we add to the mix here? Um, what else can I think of? Maybe I don't know. I'm trying to think. Let's see. Let's see if we can find something else. Okay. Actually, you know what? Let's look at one more project management software, right? Let's look at Asana. Oops, not that one. I think it's, well, they are 56% down in the last 1 year. They're 32% down this in the last 1 month. They are $9.25, and let's go find when they were $9. This, did I miss something? I did not. You got to be kidding me. They were never. Sure. I guess they went IPO what 5 years ago. Well, they were never this price. Okay, they were never this price, and looks like a little bit after they went IPO, like there is that frenzy. They were at $142. Oh my goodness, they are, what is it, like about 7% of that value. They've lost 93% of the value. Okay, they lost most of it. Okay, since 2022 they've dropped about a 50%, right? Let's ignore the valley and the peak and the trough here. So they still, and if you ignore the whole thing, they're still 50% down in the last 3 years. But let's not even go that far. Let's see, what is this peak here? End of 2024, they were $22. That's like what they've lost like about $13, 60%. Yeah, about 60% in the last 1 year. Okay, one more company that we found. The price earnings ratio is still very high, 38. Uh, Short interest is very high as well, 13%. They're a much smaller company, but let's look at tip ranks and see what the analyst ratings are for this one here. Don't tell me. Well, it's 64% upside, and the lower end is also $2 above, which is like what, 20%, right? A little over 20% is on the lower end. So again, we found one more company, again, enterprise software company, if you will, that has not had a great run at all. Now, before I try to summarize this, let's just go look at our tech portfolio and see if I can find any others that I can think of that might fall under this category. App loving is interesting. We'll have a conversation about it at probably a different time. Um, CrowdStrike, security company. We can sort of look at that. Let's see. Figma is too new to look at. The rest of them, Oracle. I think I've actually shared my 2 cents not too long ago. So we'll revisit Oracle. They're trading like a meme stock as opposed to an enterprise company. Um, Snow is another interesting company. Snowflake, Team. Actually, you know what? Let's do Team, and then we'll call it wraps with a list of companies here. 66% down, 35% down. Okay, it's following the same style here. $105, and then let's look at when they were at this price. $105, blah blah blah. Oops, what is going on here? Okay, last 5 years. Oh, I don't know why Seeking Alpha is freaking out. I don't know why I cannot seem to move this here. Okay, we've had issues with the chart on Seeking Alpha every so often, so maybe the cursor seems like a little bit stuck here. Okay, I'm just going to plot it and see $174. That's nowhere near the $105. 124. I mean, it looks to me like much like Asana, they probably, were never there at this price ever in the history of them. Uh, yeah, I mean, maybe they went IPO 5 years ago as well. Is that possible? Oh, no, sorry. Did I do this wrong? Let's look at Asana. Maybe I didn't click the 10-year. No, they were right. I didn't do anything wrong there. So, but Atlassian has been around a lot longer. So let's see, $105. I wish this cursor were not stuck. 2019, 6 years ago, right? They are the price that they were 6 years ago. The peak was $423. So they have 25% of what they were at about 5 years, 4.5 years ago. In the recent past, they were $313, which means they have also lost two-thirds, over 66% or more since February of last year, which means, if you were to do a comparison here, let me go to Asana, and then let's go to charting. Seeking Alpha's charting is not that great, but it's all right. We'll live with what we can get. So Asana and team, day chart, last 5 years. Wow, isn't that incredibly similar for two companies that are, I mean, sure, they have some similarities, but they have different sets. Atlassian has a broader suite of products, but Asana has made some headway in the space of AI, from what I can tell. But there's a lot of similarities, so they probably looks like they're companies that seem to be traded. They trade trading alongside, right? It's incredibly similar over the years. That tells you something. Anyway, so that's also what it is. And did we go to tip ranks for team? I don't know if we did. Maybe we did. I'm forgetting. Maybe we didn't. So it says, yeah, no, maybe we did not. $117, 117% on the upside, very similar. The lower end, the recommendation is about 40% higher than where they're at right now. All of this, what does it tell you, right? I mean, let's try to summarize this. All of what we've seen thus far, we picked, I think, 5 or 6 different companies, right? Yeah, I think it's just a bug with that particular chart for whatever reason. I run into these bizarre bugs on Seeking Alpha. So it seems to me, right? It seems to me that while we do that, let's just stay. Maybe we'll stay on the API page for Snowpal. Again, if you've not checked out our APIs, definitely go do so. You can build your systems, whatever it is that you're building, mobile apps, web apps, microservices. If you use the current suite and set of AI tools available to you, whether you're a vibe coder or otherwise, we'll talk about vibe coding in a second, I promise you, right? Even though you might think it's unrelated to the previous part of this conversation, it is kind of related, I think. So whether you're a vibe coder or a standard developer that also uses vibe coding, you should be able to go to market a whole lot sooner and a whole lot quicker. I mean, whole lot, it's the same thing, right? Whole lot sooner with a lot fewer risks and with a lot less money by using our APIs with the AI tools that are available in the market today, right? So, as we get started with working on an MCP server that'll make consumption of our APIs even easier. While we are working on it, you can still use them with the tools and the agents and whatnot that you're using to help your productivity. So that's just sort of socializing some of the work we do. But let me go back to where we were at. I'm just going to go back to Seeking Alpha. I'm going to go back to CRM because that's what, or even go to AMD, right? That's where we started this. Okay. Well, so what kind of inference can we draw here, right? Here's what I think we can. We looked at a bunch of software enterprise software companies, and we've seen similarities in their price points, how much they've dropped, what the analyst forecast seems to be, and the fact that they all seem to be at compelling prices. So there's two ways to look at it. One is you believe in enterprise software, you don't think it's going anywhere, it's going to change. There's a this is kind of a point of inflection in many ways, but you still believe in these companies, in some of these companies or all of these companies or some other companies that are like these companies. Then you might make a decision. You might make your decision one way, which is you want to start taking a dip into these securities, right, to see if things change. But on the other side, they can continue to drop, obviously, because you don't know if the momentum has shifted. You don't know if their products are still relevant or are going to continue to be relevant. If they're going to continue to be relevant, what does that mean, right? Let's switch gears a bit here. Why are they impacted? I mentioned AI a couple of times. You're probably familiar to some extent or to a large extent with AI agents. Now, with those agents and then agentic AI as well, uh, you're able to replace a lot of the work that was done manually by these AI agents, and perhaps companies, end users, that were using these enterprise platforms either on a per seat basis where you're paying, I don't know, $20 a month or $100 a month for 1,000 seats in your organization. Um, maybe they are not, maybe we know that companies, everybody started leveraging AI tools. To what extent and what tools surely varies, but you are using them in some form, way, or shape. Now, by virtue of using them, by virtue of creating your own AI agents or relying on agents other people have created for you, and it's out there available in the larger world there, maybe the need for you to consume these enterprise software products has diminished, has changed, or has uh, it's diminished and changed. But at the same time, what I want to include there is you've sort of started to build your own agents. So while you're still using those products, the way you've started to use them has actually changed, right? Your needs have changed, so you're not needing to use them the same way like you've done in the past. um, Plus, because of productivity that AI has brought to the table, maybe you've let go of people in your organization, like Amazon, let go of 15,000 people just the other day. Which means if they were paying on a per seat basis to these products, like, I don't know what the pricing model at all of these companies is, but I know a lot of them were based on, at least they start out, and for a long time, and even perhaps still today, they are selling a licensing by seats. Like if you have 1,000 people, you pay 1,000 times whatever the monthly or the annual price is. Which means if people have been let go from a company, and if team sizes have shrunk in large companies, mid-sized companies, and in startups, then you're paying that much lesser to these companies, and their recurring revenue from a SaaS based standpoint has actually changed. Usage based models are different, and I think they're still going to be all right for the most part, and they're going to stand the test of time. We are a usage based model at Snowpal, right? I mean, you can license our APIs as well, at starting at very cheap, at $5,000 as a base license for our APIs. But they are available on AWS Marketplace to subscribe and pay by use. It takes all of 3 minutes to get started. But if you're doing pay by seat, that has changed clearly. And that's probably why we see this impact on Team, Atlassian, or Asana, or CRM and whatnot. And I don't know, if you to be honest, how that's going to actually change. Now, companies like Salesforce have come up with their product like Agent Force, which I want to say is where they're spending a lot of their internal energies on. Again, speculation. I don't know how far off I'm from reality and truth here, but if I were to put my money, that would be my guess that they are focusing on that, and maybe they'll improve the products to the point where the customers are happy, and there's no churn, right? That they're not looking for alternatives. But at the same time, when writing code has become easier, a lot easier than before, because of a lot of these tools that are available, and add to that the fact that non-developers can also write code. I mean, I had a chat with somebody recently who talked about vibe coding, right? It was a very interesting conversation. So we talked about vibe coding, and of the many conversations I've had in the past many months with founders and engineers and architects alike, and non-engineers, about vibe coding, more importantly, with non-engineers as well in this context, they've told me that they've never ever written code, but they've started contributing to the code base using wipe through the proud mechanism of wipe coding. Now, whether you like it or not, or how much you use it, it depends on you, your team, and your culture and paradigms. But it's hard to argue that these tools have actually changed developer lives dramatically, where non-developers can now become developers or part-time developers and give you handoff, not requirements written in plain text, in plain English, but they can give working solutions, prototypes, or maybe even something more than that. I've talked to founders who have gone to production with just, by vibe coding their way through to production, or by using a combination of not even junior devs, but developers who have not even graduated from high school or college, part timers who are able to help them take products and their ideas through to fruition, which literally means the companies that were consuming all of the software, like Salesforce and other tools, are able to do a lot of this maybe by building their own agents in house, because they can use developers and non-developers alike to contribute to code bases. Now, that's not just because you're a small company, right? Even large companies have taken dramatic measures. Like, Mark Zuckerberg said in a podcast not too long ago that Meta is not hiring a lot of junior engineers because they don't have a need for it, right? They can use agents to do all most of the work that junior developers would have otherwise done, and they can use senior devs, or maybe he said they don't have a need for mid-level engineers or something along those lines, right? They can have fewer developers, senior developers manage this a lot more efficiently. So that's kind of what has been sort of happening in the space, and we see the impact on these enterprise software companies. So the companies that are helping take AI ideas, the companies that are helping take ideas through to fruition quickly using AI are the hot commodities, not commodities, the hot securities in the market. The ones that have been around for a while, big companies, quote unquote, solid companies over the years, are slowly falling out of favor. Now we'll see if things do change. But it's like, when they say, right, when there was the gold rush, the people who made the money were actually the ones who sold the shovels, right? Something along those lines. If you're able to provide the tools that are needed to take you through to fruition, to success and to production quickly, companies are wanting to invest in that space and in those companies. So which means the market is rewarding that, and folks, investors, whether it's retail investors or market movers or institutional investors, all alike seem to be putting their money in semiconductors and energy and all of these companies, as opposed to enterprise software companies. So, two ways to look at it to wrap this monologue here. One is, it's an incredibly great time to take those chances. So these companies can or will actually make great strides or come back, have a turnaround, and then you're going to get more bang for your buck. Or maybe the trend hasn't changed and you don't want to, you don't know where the momentum is, and you know where the momentum is, and you don't know when things are going to change for these companies. So you might as well look at these companies that have been trading large volumes and have been doing very, very well over the last 6 to 12 to 18 months. But there is also a caveat there. Have they run up too soon, too fast? And is there room for correction there as well, right? So who knows? I don't know. I just want to share my 2 cents here. Hope some of this was helpful. And if you have any questions, let me know. Thanks, and talk soon. Bye bye.